majority of the populations are broke right now.
Yes, everywhere right now you're suffering, but we have to understand that everyone is suffering to a different degree. People are now willing to talk to brokers online. They're willing to look at floor plans, apartment layouts, etc. online, and they're willing to book online.
It's also very little transactions probably is done online.
A major rethink of how we consume real estate.
No one knows when the pandemic will be over, but of course everyone knows that it's not eternal.
Dealing with a couple of months of delays in the construction industry is nothing new. It happens all the time anyway.
That could be more of a detriment long-term for Russian economy than the virus.
The supply-demand dynamics will be relatively okay.
Hey everybody, welcome back to Scholar Talk. I'm your host, Oli Malimov. Great to have you with us. At the end of 2019, the Russian real estate market was promised a stable development. A moderate increase in prices, there was also a decrease in mortgage rates and gradual increase in demand for apartments. January and half of February of this year passed under the time of almost absolute calm. And then everything changed. In just a couple of weeks, on March 11th, the world basically called the coronavirus outbreak and officially recognized it as a pandemic. Almost simultaneously, the oil market collapsed, followed by stock market, ruble exchange rate, and shares of major Russian companies also went down. Russia closed its borders and asked everyone to self-isolate, including our guest here, Andrei Kazanli, Chief Investment Officer for international diversified company V Holding, an investment company holding over $6 billion in asset management, focusing on projects in Russia, China, Africa, Europe, basically the entire world. Andrei, pleasure to have you here. Welcome.
Nice to be here. Thanks, Adim.
Can you paint a general picture of what is the situation with the Russian economy and talk about the real estate market in particular as an integral part of the market?
Well, I guess the overall economy is pretty much following very similar patterns that you see in other places, right? Effectively, what's happened is that people have stopped going to work, people have stopped producing, people have stopped buying. As a result, the economy has lost its top-line revenues. And effectively, if you look at the income statement of the economy, its fixed costs are still continuing. Someone still has to cover that, but there's no revenues coming in. So obviously, we haven't really seen anything like this ever since the 30s. If you look at the United States, the Great Depression, you haven't seen such a quick and extreme drop in overall economic activity since those times. And even then, it wasn't as quick to happen as it does now. So obviously, the economy has taken a significant beating as a result, and you see a huge impact of this on small and medium-sized businesses, which traditionally do not have the same kind of amount of state support. They don't have the same kind of financial resources to be able to withstand such shocks, especially if they last longer than anticipated. So I guess in that sense, it's very similar to what's happening in the United States. It's what's happening in Europe. It's what's happened in China. From that perspective, there's nothing unpredictable here, right? It's kind of like taking the mat from underneath your feet, right, in a very quick succession. Obviously, the Russian economy has a significant dependence on exports of natural resources, which obviously is amplifying the impact, because if you see what's happening with the commodities, it's not just oil, but it's across the board. It's oil, it's even precious metals, etc. You see that the commodity prices have significantly fallen, and in some cases, with oil, you see even negative prices, which we haven't seen anywhere at any time in recorded history, where you have to pay someone to buy oil. Again, I don't think that this is, I think this is a temporary phenomenon, obviously, but it doesn't affect people's perceptions and people's expectations in a very positive way. So, but again, so I have to say that so far, it's probably too early to even understand what the real impact on the economy will be, because it will probably be only evident once people are through with the quarantine and we see what impact this has on unemployment, which I believe is really the key. Unemployment, inflation, commodities prices, that's really going to be the ultimate determinant factor as to how bad this whole COVID virus, for at least for the Russian economy, really will be. So I think it's only the next 6 months we'll find out the true impact. In terms of real estate, there's, I mean, we have to understand that real estate in general as an asset class, it tends to lag significantly any sort of economic downfall or upturn. That actually goes both ways. And so typically what you see in times of recession, which is what we'll probably see from a technical point of view this year, that real estate prices are only, and the impact on real estate prices and liquidity is going to be evident only 6 to 12 months after the start of the recession. If you look at just kind of, at least from what we see in the market right now, let's say residential apartments, you know, how badly has this impacted the sale of the residential apartments? And we kind of hear contradictory things. Some developers say that their sales activity has dropped significantly, 50 to 70%. Other developers actually say, you know what, we've moved pretty quickly to move our all of our sales infrastructure online to be able to actually book and transact online without having any real significant requirement for physical presence at the site or in order to sign documents. You know, people are figuring out ways to have electronic signatures, signing mortgage documents.
Or is something new that has been introduced because of the COVID-19?
Well, I think that a lot of these mechanisms have been introduced in the past year, 2 years. But the thing is that the COVID virus has significantly, it's increased the speed of adoption effectively, right? People are now forced to adopt this much quicker than they did before. And a lot of people who were unwilling or were distrustful of this whole system of online transactions, right, all of a sudden are saying, well, we don't have much of a choice. So the adoption all of a sudden is accelerating significantly. And you see this actually not just in real estate, but in pretty much all spheres of commerce where you can now do things electronically. And this is really pushing people's psychology because that was probably the main barrier. It wasn't so much technical infrastructure, it was just people's psychologies, right? People are like, well, we don't trust the internet, or we don't trust payments online. Now you're seeing a huge increase of that. So people's consumption patterns and the way they transact is now significantly changing as a result of this whole thing. So in general, what I would say is,
but in scope,
on the short,
it's also very little transactions probably is done online. People still want to go and talk to their agent, talk to the real estate broker if they want to buy an apartment, for example, right? So they'd rather wait a little bit.
No, sure. But what we see in actual bookings and transactions, you would be surprised. People are now willing to talk to brokers online. They're willing to look at floor plans, apartment layouts, etc. online. And they're willing to book online. They were willing to put in small parts of, some small booking fees. And actually, we actually had a couple of employees that said they actually just recently bought an apartment fully online. The whole documentation phase was done online. Now, I'm not saying that this is obviously the general kind of situation in the market, but we do see that it's actually not as bad as one would have predicted. So on a short-term basis, there's definitely a sharp drop in sales activity, but it seems that it's being offset technologically. I guess on a more longer-term trend, I would say that real estate in general is undergoing, I would say, a transformative phase. And this is not just for offices, which have been disrupted by players like WeWork and the whole co-working concept. And I think that it's a valid trend that's going to continue, and it's probably going to accelerate with the virus, because a lot of people realize that, A lot of the office activity can now be done remotely. There's a lot of people that don't need to be in the office full time. So you're going to see that accelerate, obviously. And this is a trend that hasn't started just because of the virus. This has been happening for a while, but now you're going to see an acceleration of that. But I think that it's not just offices now, it's actually now residential. People are going to be looking at buying an apartment, and they're going to be considering things like, well, if I have to stay home for 2 months, can I have a comfortable lifestyle in this apartment? You know, can I deal with having my kids running around? Do I have enough space? Do I have enough infrastructure to be able to work in this space if I have to for 2 to 3 months? So I think there's going to be a lot of rethinking of what the appropriate real estate space. It doesn't even matter which sector, but just the overall rethinking of space in general is really going to be something that I think we're going to see in the next 3 to 5 years as a defining trend. I think that, you know, when you look at apartments, apartment buildings, how communal space is actually organized, you're going to see a huge transformation of this. So I think, just to kind of go back to your question, I think the real estate market is going to be lagging. If the COVID virus is something that is resolved in the next 2 to 3 months, I don't think there's going to be a significant impact on real estate demand, at least here in Russia or Moscow, to be more precise. You start seeing some major changes in the way people are approaching their needs for space, both in the office sector, both in the residential sector. Retail obviously has been undergoing significant changes already, so that's going to continue to happen. But I think overall, we're gonna really have a major rethink of how we consume real estate in the next 3 to 5 years.
Mhm. But in terms of the apartments and residential, are you speaking more of a small percentage of the population? If we just considered, for example, Moscow, right, of those who can buy apartments even after COVID, because majority of the populations are broke right now, and it seems that after the quarantine will be over, many of them, well, if you, for example, compare it to some of the other countries in the West who are getting checks in the mail, Russians don't really have that opportunity, and they're not going to have more money to spend on, even on the mortgage, especially at the rates that Russia has right now.
Well, that's a very good point, and that's why I'm very careful to say when I look at the market, I look at Moscow, because Moscow is a country within a country. It's got its own supply-demand dynamics. It's got its own wealth dynamics. Obviously, Russia simply does not have the kind of financial firepower of the United States or of some Western European countries like Germany, for example, which can, in times of crisis, mobilize a huge amount of financial resources to be able to offset the impact of effectively people not working. And someone has to foot the bill. And it's certainly not going to be most of these small and medium-sized businesses, which effectively are living month to month, revenue to revenue, paycheck to paycheck. And obviously, Russia has a lot less flexibility in this regard. Which is why, you know, I'm hoping that by June we're going to be pretty much out back to work, because otherwise I don't understand how Russians can cope with such a long period of effectively no revenues. The other thing you're absolutely right that the overall buying power will decrease. That's certainly the case. And real incomes have been falling anyway since 2014, when the last time that there was a ruble devaluation. However, I would say the following. First of all, inflation has significantly been reduced over the past 3 years. You also have mortgage rates coming down significantly. I mean, the central bank has just recently lowered the central bank rate by another 50 basis points, and now it's 5.5. Historically, this has never been this low.
It's 5.5%,
and also
only 9%
yes,
a year ago.
That's correct. And not only that, but the central bank has very strongly indicated that it expects further rate cuts. So the central bank is finally adopting a very accommodative financial policy, which has always been the opposite of what it has done in the past. It's usually very fiscally conservative, and it's mostly focused on inflation rather than economic growth. Obviously, you can't really increase people's salaries with a lower interest rate, so it's not necessarily the panacea for lower incomes. But I do think that fundamentally, at least the Moscow market has enough of a wealthy population and enough of an undersupply, a fundamental undersupply of apartments that for at least the residential sector, I do not expect us to see a huge drop or a huge long-term drop in demand. I think that there is also a bunch of legislative changes that have been introduced over the past year where effectively developers can access project financing. So bank financing is the main source of capital for building. There's some consolidation in the industry, which is going to shrink the amount of developers out there, plus lower mortgage rates and a general tendency of Russians to approach residential real estate as almost like a status symbol. I think that fundamentally, again, medium to long term, the supply-demand dynamics will be relatively okay. Obviously, short term there will be a drop. How much of a drop, I'm not quite sure, but from what we're seeing so far, it is not completely catastrophic. Again, God knows what's going to happen. Russia is an extremely unpredictable place, unfortunately. So. Always a disclaimer that his history has always been kind of always provides some sort of unexpected shocks. But be that as it may, I think that again, medium to long term, the supply demand dynamics are still going to be okay, and that's what we're all hoping for, obviously.
Absolutely, I think you hit the nail on the head, especially when it comes to Russia. And the virus is also unpredictable, and no one knows when the pandemic will be over. But of course, everyone knows that it's not eternal. But the economic halt will not go unnoticed in Russia for at least a couple of years. According to forecasts of the central bank that you mentioned, the dynamics of Russian GDP in 2020 will definitely be negative. Some predict maybe it even may go down to -5%. If the forecasts of the economists will come true, the decline of in the welfare of Russians will be even more rapid than in the previous crises. Of course, we're not even close to the end of the pandemic. And we know that your holding company, via holding development company, is involved in the construction of 1.1 million square meters of a project in Russia. Tell me how it can potentially affect that project that is only in the beginning stages of it.
Well, I think that the first and very obvious answer is that all construction works have been stopped in the whole industry. So that's one of the measures, one of the countermeasures against the virus. So obviously, the whole industry is going to suffer as a result because effectively all construction works have stopped, and that's one of the worst things that can happen in a construction project. Again, what I would say is that the good thing is that if you're well capitalized, if you have your financial buffers, if you have your all of your loan agreements in place, etc., I don't see that as long as this construction moratorium doesn't last for more than a couple of months, I think the industry is going to be fine. I don't think that you're going to see anything out of the extraordinary, because usually, look, I mean, the construction industry is dealing with a couple of months of delays in the construction industry is nothing new. It happens all the time anyway. Obviously, having no works on site is problematic. But again, if it doesn't last for more than a couple of months, I don't think that the industry as a whole is going to be, massively affected. Plus, you have to understand that the government is also it understands what the impact of this potentially can be, and it is taking measures to make sure that at least the larger developers will have some sort of support, and I think that there's some measures that are actually being implemented and being kind of discussed right now. So that's kind of the impact there. Obviously, I think that, again, I think it's not even so much, my worry is more on oil prices, to be honest, because I think oil prices and unemployment, I think that those two things really are going to be the driving factors behind the success of any economic venture in this country, because those are the top two things that really will drive everything else. So I think that if oil prices can more or less equalize, get back to sort of normal levels, and if unemployment can be kept in check, whether it's through sending checks in the mail or whether it's some sort of other government support, then I think, and if the quarantine doesn't last too long, and I'm hoping that it doesn't last too long, because one of the things that I've been reading, and I'm not sure how accurate this is, but it seems that a lot of the doomsday predictions on fatality rates, on things like infection rates, so far have not come to be, and in fact are much less than people originally expected. So I'm hoping that this is a general trend, and that the more we understand about the virus, and the more positive things we find out about its potential ability to have high fatalities, etc. Hopefully, people will just be less scared and less panicky, and more willing to go outside and be like, oh, it's not as bad as we thought, and kind of start getting really back, getting their lives back to normal. So I think those are really the key things to watch out for.
It's a very interesting point that you just made. Basically, you said that and correct me if I'm wrong, if the virus goes within, let's say, a month, right? The sooner the better, but we will still have the same price of oil, the same low price of oil, and the unemployment rate, which is also somehow, you can say, logically, that is correlated with the oil prices. That could be more of a detriment long-term for Russian economy than the virus.
Absolutely. It's not the virus itself that's causing this. It's the countermeasures, and it's the what I would say the secondary effects, the secondary and even tertiary effects that are actually more damaging long-term, right? It's the oil price, it's the price of commodities, it's the fundamental impact on employment, and therefore the ability of the economy to generate revenues is really going to be the major issue, I think, long term.
Your company works all over the world. You are raising money for different projects from wealth funds. In terms of working with sovereign wealth funds, international funds, do you think that the model will change in the future? And do you think it will be the business as usual? What do you think will change in the behavior of those wealth funds for you to understand how to work with them in the future?
Well, I think that sovereign wealth funds are quite sophisticated, experienced players. And I think that for them, economic cycles, recessions, etc., is nothing new. They've seen it many times before. They know how to deal with it. Hopefully, there's a lot of reserve capacity to make sure that they can absorb a lot of these temporary shocks. Hopefully, they'll be temporary. So I think that as any sophisticated investor, long-term investor, someone that has a much longer-term view, will tell you is that, look, economic cycles and black swan events unfortunately are part of the game. There is nothing here that cannot be cannot be compared to other historical examples of when this has happened. Obviously, every crisis is a little bit different, but fundamentally, some of the impacts that you see on profitability, on revenues, on economic activity, et cetera, they're all quite similar. And I guess the answer to your question is that, look, a long-term disciplined investor, which is what a sovereign wealth fund typically has to be, is not going to change their approach simply because of another economic cycle. In fact, they usually price in economic cycles into their financial models and stress testing, et cetera. So I don't expect all of a sudden that long-term investors will start looking at things differently. Of course, they'll start to take into account new factors which they never factored in before. For example, again, if a contagious disease happens, is the world really prepared for it? I think that's now going to be something that's going to be factored into any sort of financial analysis, right? But fundamentally, I think that investors need to invest. They need to find new opportunities. They need to price them correctly. They need to take all the risk factors into account. What I will say is that hopefully, if this is a protracted economic recessionary scenario, which it very well might be, then typically investors would want to would at some point switch from risks to opportunities. And they say, well, actually, you know what? Maybe this is a good time to start looking or to start switching to looking for buying opportunities. Because usually when you have price corrections of this magnitude, although a lot of the losses have been actually regained, at least in the public markets. I don't know whether that's going to be temporary or not. I suspect it is temporary. But be that as it may, when you have significant corrections in the market, obviously at some point you're going to start seeing buying opportunities, and hopefully that's going to be the stage at when you're going to see the bottom of the market and sort of turn around. So, I think the best way to look at this is also to say risks, yes, but there's also a lot of room here to start for an opportunistic mindset, looking for new buying opportunities.
I guess the question was that can potentially the well, dry out for many of the countries that are looking to save their economies right now to put, money into the hands of their people.
Well, I don't think so. I don't think so because you have to understand that these funds have been created to guarantee the long-term prosperity of their people and to reduce the reliance on one-off industries or sectors. I mean, that's why this sovereign wealth fund industry was created. It was created by Norway, actually, who was sitting on a giant wealth pool of oil and gas that was discovered in I think it was the North Sea. Right. And at some point said, we know this is unsustainable. We need to create another vehicle which will take all this oil wealth and invest it long term, so that our people over the next 100 years will have a nice, predictable, and hopefully growing source of income. So fundamentally, these economic recessions are actually the fundamental reason why these sovereign wealth funds exist, is to protect their people from such shocks. So if anything, I think that these kind of economic recessionary scenarios reinforce the need for these sovereign wealth funds, and in fact that they should grow even larger in terms of the capital base that they can deploy for buying long-term assets. So I think that from that perspective, there's even more of a case to be made for their enlargement, if anything.
Well, hopefully that's the case. Absolutely, because it can present many more opportunities. But the question is, will these funds continue to invest outside of their countries and outside of their regions like they do right now, or they did, before COVID?
Well, I think that most of these sovereign wealth funds don't have much of a home market to invest into, or even if they do, they're already overexposed to assets within their own country. They have to diversify. If they want to lower the risk of their portfolio, they need to diversify into other markets. They need to diversify into many industries and expand their geography, if anything. And again, usually economic recessions in effect, show you the risks of too much concentration. So if you're concentrated only in your own country, during an economic scenario, you tend to have much higher losses than you would have had you been more geographically diversified. So again, I think that these scenarios reinforce even more the fact that they need to go outside of their own home turf.
But this is a different scenario here, because outside of their home market, there's also a problem everywhere else where they have invested. Right?
I know, but still,
when everybody's
the,
on the same boat, on the same plate, where everybody's suffering and all of the investments are suffering as well. It's interesting.
yes, everywhere right now you're suffering, but we have to understand that everyone is suffering to a different degree. So for example, if you look at the public markets, you look at the S&P 500, for example, the S&P 500 was down 30%, but now it's back up by like 25. So the overall losses for the year are like minus 5% or something like that. I was looking a couple of days ago. I was shocked at how much it has rebounded. Again, I think this is a temporary. I think the markets are underestimating the impact on economic growth of what's happened in the past couple of months, and also you see that in the unemployment numbers. You know, the United States unemployment is like 26, 27 million people, which is unprecedented. But anyway, going back to your question, everyone's going to suffer to some degree or another, but everyone's going to be suffering differently, and everyone's going to be coming out of this. Some people much quicker, some people much slower, and that's where the benefits of diversification kick in, because it allows you to benefit from those people that are actually going to come out of this much faster. I suspect that countries like the United States, with their tremendous financial firepower and their willingness to use it, which has been a major boon at this time around, is going to make, going to position them to rebound much quicker than, let's say, other countries which do not have the same kind of resources. So again, it just reinforces the case for diversification.
You are right now also in self-isolation. Tell us what you're doing to, I guess, grow yourself. What are your new hobbies, and what do you hope to come out from self-isolation with?
Well, I guess you could call it limited self-isolation, in the sense that I was lucky enough to kind of get out of the city very quickly right before the quarantine hit. And I've been living kind of in the countryside for the past 3-4 weeks, and hopefully going to be here for another 2. So I've been kind of spared the worst parts of self-isolation. You know, I have a forest right next to me. I take horse riding lessons. You know, so calling the self-isolation in the extreme is probably not doing it too much justice. But I guess my main goal for this period was to come out as a better me. I wanted this experience to make sure that I use it to the max. You know how they say, don't ever waste a good crisis. So from that perspective, you know, I really wanted to maybe learn a new skill. So I've been taking horse riding lessons. I wanted to make sure that I'm in good physical shape. So I've been exercising quite a lot. I've been walking a lot. I've been reading a lot. I've been writing a lot. I've been doing my music a lot more so than I had time to do before. So I think that I tend to be a pretty optimistic and positive person, and every time something happens, I try to look at it from sort of a positive angle. And despite the fact that obviously I'm socializing a lot less and I see people a lot less, I think that this time has offered a tremendous amount of quality time in terms of self introspection, reflection, meditation. And it's really something that has made me slow down a little bit. It's made me enjoy silence. It's made me enjoy stillness, and I really derive a lot of not just pleasure, but it does seem like something is changing and growing and moving towards a positive direction inside. I feel like I am becoming a better person as a result, and I hope it's not just temporary. And also, I think that coming out of this, hopefully, I will have developed some more positive habits. Because the way I look at it is that truly successful people, what really differentiates them from people that maybe not as successful is really kind of the quality of their habits, the quality of their routines, and that's something that I've tried to work on when I've been on this time of sort of self-isolation, is really kind of try to improve the quality of my routine. And hopefully, again, that's something that sticks with me, and hopefully it's overall next year or 2 years from now, when I look back on this, I'd be like, wow, that was a great experience. And I took out maximum utility out of it, and took full advantage of this very strange but interesting time.
You've surely done that. Thank you for sharing. Thank you for sharing your thoughts on the economy, on the business that you're in, and of course on your self-growth. I think it's very important. And I think that the majority, if not all of our listeners, will definitely take some pointers for themselves. You know, you have to step back, take a step back. You have to listen to yourself sometimes. You have to love the silence as well. And I know that you've been doing a lot of sport. You've been walking more than 20 kilometers every day in the woods?
That's right. That's right. I'm shocked at the walking meter that I have, the averages that I see.
Stay positive, stay healthy, and stay safe.
Thanks, man.
Thank you
Thank you for having me on the show.
Absolutely.
Really appreciate it.
Take care, brother.